In this video, I want to show you some indicators that help me identify when markets were going to break to new all-time highs. In particular, I'm going to look at Bitcoin today, but of course, I'm also going to show you SP 500 because there is more data on that chart. We have more data points to use to show and identify that these indicators will work over more than 10 years of data. Now, it's something that helped me sift through the noise of the media, the noise of YouTube, possibly what you're hearing and seeing day to day, the noise of Twitter, the noise of everything else out there, as there are so many ways that the media can tell us the market should be doing something when in fact it does the opposite. And we're seeing that in today's market. We are seeing the SP 500, we're seeing the NASDAQ, we're seeing stock markets around the world going up and getting very close to all-time highs, and in some cases hitting all-time highs, even in the case of looming recessions, in the case of property prices potentially collapsing, in the face of many uncertain times, we're seeing the markets do something different. And that's what I want to get through to you in today's video, looking at what the markets are actually doing, using technical analysis, using the key data from these particular charts, rather than hearing all the noise out there. And I'll also explain to you why that noise continues to go on and how they continue to get it so wrong, and how you can identify that and then stay away from it so that you can best position yourself in the markets for your long-term investments. You know what to do. Hit that like and subscribe to the channel. This is your home of macro cycle analysis across cryptos, stock markets, real estate, and Bitcoin. We study the past to forecast the future. That is what our specialty is here. And if you want to get more on that, links are in the top of the video description for our free crypto and economic report that comes out once every 2 weeks, plus a few other specials and bonuses that we get through on that every now and then. Quick shout out to our members as well, who are smashing the gains for their short-term crypto trading, long and short. We've got 58% here. Justy's smashing out a few gains here across BTC, comp. We've also got more here, 100% on BTC, and plenty more since the last video I did. And I've just been a little unwell. That's why a video hasn't come out in the last 3 days. Otherwise, I'm usually here every single day. All right, so this one is going to show us Bitcoin going to new all-time highs. What are those indicators? I know you just want to get to that, but really need to understand why the masses don't get this and how you can avoid that noise. What is going on with that particular noise? And we're seeing it play out. And I want to show you an example of that in terms of how it is happening, not having a go at particular people. The reason is we don't need to have a go at particular people. You just need to see how it plays out in real time. So Bitcoin has put that low in November, and the stock markets put their lows in October as well. So the S&P and NASDAQ and many other countries around the world did a similar time frame around that October. I know Australia did June and October, so I hit a double bottom there. So these are some ways that high-profile analysts and financial media and high-profile traders and investors on crypto Twitter or crypto YouTube, whatever, all of the big names, they'll continue to get it wrong, or they'll begin to pivot on their bearish views. So the one I wanted to get through, and this is a post I did now coming up to a month ago, point number 5 here. They'll refer to the bearish fundamentals rather than the chart price action, which obviously is currently going up. So that's a big one that we will see and that we're seeing now. The importance of this is so we can, like I've said multiple times, decipher the noise and how you can actually make money from the market. There's two different things. One is trading the economy, which you don't do. No one does. Only the news media does, and they get clicks. Your time lost by watching crap, they get money from that. And then you don't make any money as well because you're basically trying to trade the economy, which doesn't work. That's what I've learned many, many, many years ago. I wish someone told me this earlier because obviously I would have been much better off than listening to all the BS out there. So even so-called technical analysis experts are guilty of focusing on fundamentals too much. Trust no one and always do your own research. So basically they're going to focus on different news items, go to the fundamentals when potentially they were TA or they're trying to figure out why the crash isn't coming. Now, I do have a little bit of a hit on this channel every now and then. They used to be bullish and they went bearish, and now they've continued to remain bearish. So not a go at the people, just the ideas, because it's the ideas that we can debate We won't actually like the people, okay? We get that, all right? It's the ideas that we want to debate here. So it's just been bearish over bearish over bearish, and trying to explain why the market keeps going up, yet saying it's going to collapse, all right? So that was pretty much one of my points here, that they will focus on bearish fundamentals rather than chart price action. And we're seeing chart price action go up on the S&P, on the NASDAQ, on Bitcoin, in real estate as well. And I know some of you will disagree with that, but in many of the major cities around the world, we have seen over the last several months a tick up. 0.5%, 1%, 1.5% in real estate prices. So that has been going on, and we're starting to see that happen again after a slight slowdown in 2022 because markets went chaotic in 2020 and 2021. You have to have pullbacks. That's normal in markets. All right, so these are the ideas. This is what we have to avoid in our trading. Fundamentals will keep coming up. Yesterday we had non-farm employment change that was double the amount of jobs that came on. People are freaking out about that. The SP500 came down a little bit. If we look at it on the day here, it was 0.79%, basically a percent from the top. No big deal really when you look at it in terms of the macro. But the short term, all of this sort of stuff plays on the psyche of the new investor, at least anyone that watches the news. And it's always something. It's always one thing to the next thing to the next thing. What do we had? We had the non-farm employment. Then next week, you're probably you'll get hit with CPI data, CPI month over month, CPI year over year, which has actually peaked in July of last year. So nearly 12 months now of inflation coming down. Yet there is still fears of this is going to turn and it's going to race to 10 or 20 or whatever percent again. Sure, it could happen, but living in that fear when the market's done something different for the last 12 months, I think is pretty stupid, especially if your game is to be making money from the markets. If your game is just to listen to news headlines, so be it. That's not a game that I want to play. Maybe you've got a day job and that's all you can afford with your time. We're here to actually make money from the markets, and this is how we interpret the data that is given to us so that we can actually, as I said, make money. All right, so you hit with the next fundamental, you just go down the list here of all of the high impact, which is this red indicator here, high impact announcements. Core PPI will be the week or the day after that. So there's always something to take our attention away. So what's this game-changing tool? It's the Gann 50% level. What I want to show you is how in almost every situation, when the markets get above their 50% retracement level, so the move that they've done all the way down to the move above, they move on to new all-time highs. So you can see here, this was the previous cycle, 2013 into 2015. This is for BTC. So I'll start with this and then look at some market sentiment as well, because we definitely need a cool off at points. But understanding where that higher low comes in, where the market is safe to buy on bad news, that is a big key for an investor, because like you can see, there's pretty much been a lot of bad news, a lot of bad things in the economy, in fundamental data, you name it. There's a reason to be selling and then waiting. It's going to crash, it's going to crash, it's going to crash. You know, it's the same story. But if you can identify where the strength is on those pullbacks, that is going to save you a lot of money. And then when these things break down after a top, it can also make you a lot of money and of course save you a lot of money as well, because you're getting out of the market when everyone is still hoping and waiting for another bounce. It just doesn't come. Anyway, 50% level, you can see we were underneath it. We put the bottom in, top to bottom, halfway, market tests, went back under, and then finally came back above a small little test here before we went on to test a new all-time high. So that did put in a new all-time high in January 2017. So basically 4 years later, 3-4 years later. And then we've got a good all-time high at this point, and then the breakaway from that point there in mid 2017. So that was the first case of the 50% level getting hit. So we're on the logarithmic chart now. The next 50%, this was the 2018 bear market all the way into that December low. The market ran up, tested 50%, couldn't close above it for more than a week. You can see one tiny close here and one close here, and then got rejected. This time, however, it just ran down for multiple weeks, tried to come back and test, obviously the pandemic, but then it quickly came back up again. So the market is showing that 50% is like a magnet. It comes to these levels, it wants to test these levels to see where the supply and demand is. It's the halfway point between the all-time high and that cycle low, or a significant top and that low in the cycle. It's basically looking at, are we balanced, or are we going to go on to hit new prices? So you can see in this 50%, that's what's happened from here. Came back up, tested it, fell under. You had some bad news, but it was a higher low. So you know you're getting tested here. And these are those points, as I was talking about, that you could be looking to scoop up that dip rather than trying to scoop up all the other dips on the way down, because they just get crushed, especially straight after an all-time high. Of course, the market goes on, new fresh all-time high from that point. So if we get rid of that one and we come to today's price targets, well, the 50% level is at 42,200. So what I'm saying now is, if Bitcoin can get to that 42, maybe a nice close above it, even a test, but higher lows from that point, they are going to be more buy the dip opportunities. Of course, it's nowhere near as good as 15K or 19.5K or 24,800, all of which we've talked about on the channel. You guys have seen that. You can go back and check every single video about those points. And I've gone on record many, many times to say that 19.5 is not going to be hit again in this cycle for reasons I've mentioned before. 15.5 is not going to get taken out. I talked about that before. We're looking at key data points, time cycles, price targets, patterns repeating, volume coming into the market, those sort of things that are actually important to the movement of price. They're important to supply and demand. They tell us what is going on in supply and demand, not all of these fundamental factors. These are all important points to note, but they're not important to trade from as much as understanding what data is coming through on this chart. So as I've said, these two areas are not going to get taken out. They're pretty much embedded now for this cycle. I'm still unsure about this low, but once 32 is taken out, I would then go and say that this low in June, that 24,800, is not going to get taken out. Once that 32 is broken, is what I'm saying, not just yet, but once that's broken, then I'd probably look at this one here also not getting broken. So Bitcoin wouldn't go back under 25K once 32 is broken. So the goal here is for BTC to get to 42,200, put in some higher lows, and then we're most likely going to see that new all-time high get broken again, come up and test those levels. Now we can also look at 50% one other way. We're going to look at it from the all-time high, or the significant top, in this case the all-time high, to zero, so the halfway point through that level. And this is a really good number here, 34,500. So it's a nice clean round number, $34,500. Here are the other lows. You can see that the market was testing on at a 50% level, just using the halfway point from the all-time high to zero. And it came back and tested it really significantly during January of 2022 and February, before it went on to make that first significant lower top, which is really, really significant in markets. You can see that from a monthly point of view before the market collapsed from that point. So that is a key level for the market to get back above. We have multiple of them at the moment. There's 32K. Obviously, many are looking at 31, 31.3. We're also looking at now 34,500. So there's a lot going on here, which is why it's taking a lot of time. But once we can get past those and start to consolidate, that's going to be another key level, 34,500. So there's a couple of different ways to use this indicator. From the all-time high to zero, easy. Anyone can do this. Halfway point in the middle. That is your key to know that the market has now got strength, and we're looking at strong being in the upper half and weak being in the under half here. Now we've also talked about multiple other indicators that give us the confirmation that the bull market is in. We had that first one when BTC broke through the logarithmic downtrend. You might remember this one here. It happened so long ago, I've taken it off the chart. Happened back in January. It came on and tested it almost to the exact dollar. So a beautiful retest on that logarithmic downtrend. That was one of those key bearish signals that the market had to break above. It did it. We've also had the overbalance in price and time. So it just means that we've had an overbalance in price and the amount of dollars that we have seen the market achieve to the upside compared to any other move that happened in the bear market, which means there is more buying coming into the market. Buyers are happier to push this price up. They're happy to keep buying for a longer period of time than they have been at any time in the bear market. That is an extremely significant market sentiment point of view to understand about trading. And it's not talked about anywhere near enough in the markets, which is fine. These are some of the edges that we use in our own trading. So if you want to learn more about that, as I said, link is in the top of the video description for TIA crypto, TIA free crypto, and economic reports down there. We've got a lot going on there, plenty of education as well, which is TIA premium. So check those memberships out down there. This is your home of macro cycle analysis. So they are the other two indicators that we had, the logarithmic downtrend and the overbalance in time and price to the upside. We're very close to the 50%. All bets are off for the bears once that has happened. And pretty much at this point, I've also said that the bets are off for the bears because we also have the day counts that have come in for these cycles. Now, the video's gone on long enough, so I'm going to do a fear and greed update for the stock market and for cryptos, because we can see we definitely need some sort of cooling off here, and we've just had it after the last several days since we had the ETF news. So that's going to come up in a future video, but I just wanted to show you the 50% levels on the SP 500 because this happens in every single market over all time frames. So just looks a little bit messy there, but we're going to go back to the 70s. You can see from the all-time high to the crash low, measure, there's 50%, market gets back above, a little test to the underside. Guess where it tests for you that have been watching? There's that low in around February and March, which markets just love. They love February and more in particular, March for lows. Anyway, 50%, another retest, almost dead to the cent, and then the market goes on new high. So that's back in the 70s. It got back above the logarithmic downtrend. It had an overbalance in time and price. Look at that move to the upside, just far bigger than any of the other moves. It's all over by that point, but you can go back into history and see that this was a very bearish time in the market. Even in the early 80s was a very bearish time. This was the time that Ray Dalio nearly went broke. In fact, I think he may have gone broke and borrowed some money from family to keep his businesses going. So that's that period there. That's how bearish everyone thought the stock markets were going to be. It was something around the US was potentially going to default on their debts to Mexico. Think about that. 40 years later, doesn't make any sense. So 1982 into 1983, same sort of thing here. Here's our high lows. That's the 50% there, so we can remove this so we can clear up the noise. Here is your move to the downside. Here is your 50% test. Push away, new fresh all-time high. Market got back above the log downtrend, and this move overbalance in time and price compared to anything previously. Let's move on again. We go up here to the 1987 collapse. You can see a test of the 50%, a break above the logarithmic downtrend, a test of the logarithmic downtrend, and this one's pretty easy to see. That move to the upside bigger than anything in the move to the downside because this downside move was so fast and so strong. Breaks above, little test, new all-time highs. Yes, it takes several months, but that's the state of the markets. It takes time because during this period, like we're seeing now, especially now, everyone is still so bearish, and yet the markets are approaching new all-time highs. It's just part of how it works. All right, same sort of thing, 50%, little test on top, back under, another little test, break to new all-time highs. It broke above that log downtrend. This is on a much, much shorter time frame, so I don't like that one as much, but it still works out. We fast forward through to 2000 to 2002, huge bear market, huge log downtrend, nice big bounce up, bigger than anything that we saw previously. You can see the move here, and even to this point here where it tests almost to the exact cent of the 50% level. Now, these aren't just thrown on there willy-nilly. These are magnetized to the exact top and bottom. That's how accurate this indicator is. There's your 50%, almost to the exact cent. A break above, beautiful slice, another test, and away she goes to a new fresh all-time high, even if it was just by a few points. Let's get rid of this to clean it up. So you can see with the GFC, you get the idea. A break, a nice big jump above, test of the 50%, another test of the 50%, new all-time high. All right, fast forward to today. Guess where we're at? We have a break of the log downtrend. We have And overbalance in time and price to the upside, bigger than anything we've seen in the past, even if we're just measuring this one here, bigger than the move here, and cleanly above 50%. So I've gone on record to say that I don't think we are going to go below 3,800 points. S&P this cycle is not going below 3,800 points. It's definitely not going below 3,500 points. Cycle low is in. The bears had their chance and they missed it. I would almost say that we're likely not going to go under 4,000 points either. So there's another big one there for you. Where are we at? 4,400 points. So any sort of corrections here, let's wait and see where they're at, but I doubt it's going to go anywhere below 4,000 points now that we're above 41.55, which is the 50% level. All right, so if you want to know more about that, go over to my Twitter, links in the video description. This explains all of those points that are actually happening right now. You know, I've pointed them out. This is on multiple different channels and accounts and that sort of thing. It's what I wish I would have understood when I first started, because there is so much noise out there. And the biggest thing that I can do to help you is be able to cut out the noise and give rules to cut out the noise, because how else do you know which is, I want to say telling you the truth, but they honestly probably believe what they're saying. How do you know what's actually going to work for you? Put it to the test, clean out the noise, see what works, see what doesn't. I'll see you guys back at the next video with a like and subscribe, and have a nice day. Hopefully I'm going to be sounding a little bit better at the next video. Till then, peace out.